These four stocks have the potential to make millionaires, and the opportunity is still ripe, though it won't be for much longer. If you don't take a closer look at these stocks now, you might miss out on a life-changing opportunity. In today's video, we'll cover the latest on these stocks, why they are printing money right now, and what deserves more investment. Before we dive in, if you find value in videos like this, all I ask is that you hit that like button. Don't forget to subscribe. The best prescription is a subscription. I'll make this a short but super important video if you want to make money this week and in February. I'm going to be giving you a lot of research on how to make money. No masterclasses, no webinars, nothing. I'm just going to get to the point. I respect your time, so let's jump right into it. One more thing to note. These four stocks are under $10, which makes them small cap stocks, but you don't need to worry, I've done all the hard work and research for you. The first stock on my list is Archer Aviation, ticker symbol ACHR. Archer is an innovative aerospace company focused on developing electric vertical takeoff and landing (eVTOL) aircraft for urban air mobility. Their flagship aircraft, Midnight, is designed to transport 4 passengers and a pilot on short urban trips, typically lasting 10 to 15 minutes. These flights could significantly reduce travel time in congested city areas, turning what would normally be an hour-long drive into a quick flight. Archer's financials show a company in expansion mode, building its asset base while occasionally fluctuating in earnings. They have beaten revenue estimates several times, which is a strong indicator of positive momentum. However, like many emerging technology stocks, Archer can experience high volatility, meaning sharp price swings in both directions. Analysts forecast a 22% upside for the year, reinforcing its potential as a high-growth investment. The stock is currently trading at around $9, and technical analysis suggests strong support around $9.64 with resistance at $8.89. It could present a great buying opportunity if the stock pulls back to key support levels. Archer has secured major contracts with the U.S. Air Force, underscoring the military's confidence in its technology. Additionally, they have formed a partnership with Anduril Industries, aiming to provide advanced aerospace solutions for defense applications. The company is on track to begin commercial operations by the end of this year, marking a pivotal moment in its growth trajectory. This stock reminds me of Tesla in its early days, slow at first but with massive long-term potential. Many skeptics doubted electric cars a decade ago, but today, they dominate the market. I see a similar path for Archer Aviation as urban air mobility becomes mainstream. As with any stock, timing your entry is key. I always recommend waiting for a dip before making a purchase. Patience has consistently worked in my favor, and I see Archer Aviation as a long-term growth driver rather than a short-term trade. With strong government backing, cutting-edge technology, and increasing market adoption, Archer is positioned to become a leader in urban air mobility. This could be your next big opportunity if you missed out on Tesla or other disruptive technologies. The next stock on my radar is Fiscal Note Holdings, trading under the ticker symbol NOTE. This company specializes in global policy and market intelligence, leveraging artificial intelligence alongside extensive data and expert analysis. By doing so, Fiscal Note helps organizations navigate complex policy landscapes effectively. With rapid technological advancements, shifts in foreign policy, and the unpredictability of a new presidential administration, the need for specialized market and policy intelligence has never been greater. Companies like Fiscal Note are crucial in providing real-time insights to help businesses stay ahead. Speaking of technological advancements, have you seen how one of Tesla's competitors developed an electric vehicle that can detect potholes and leap over them? Or how a lesser-known Chinese company recently introduced DeepSeek, an AI model that rivals the best in the US. The stock market reacted immediately to the DeepSeek news, showing a significant drop, which helps timestamp this discussion. Given the rapid changes in AI and policy, it's no surprise that businesses need a company like Fiscal Note to keep them informed with the latest market intelligence. However, a quick look at their financials raises some concerns. While their margins are improving, they remain deeply negative. Their debt-to-asset ratio is increasing, and they have consistently missed forecasts. Yet, analysts remain optimistic, predicting over 100% upside within the next year. I'll be honest, this stock is a bit of an unknown. It has strong potential, especially with the ongoing policy changes, but it's one I'll be monitoring closely in the next earnings report. I want to see improvements in revenue and profit margins before making any big moves. As I mentioned earlier, small-cap stocks come with higher risk. It's crucial to conduct thorough research and keep a close eye on developments. That said, this company checks all the boxes for having a low entry point and massive growth potential, evidenced by its impressive 370% gain over the past year. The next company on our list is D-Wave Quantum Incorporated, ticker QBTS, a pioneer in quantum computing systems, software, and services. It holds the distinction of being the world's first commercial supplier of quantum computers. Recently, D-Wave partnered with Karasoft Technology to expand the distribution of its quantum computing solutions to the U.S. public sector, aiming to accelerate government adoption of quantum technologies. This strategic move positions the company to tap into federal and state agencies, increasing the real-world application of its cutting-edge technology. I've discussed this company multiple times in previous videos because I believe quantum computing is a rapidly growing sector with massive long-term potential. In my opinion, we're still in the early stages of this technological revolution. From a financial perspective, D-Wave is still in startup mode, making it difficult to analyze based on traditional metrics. However, its increasing government engagement suggests that revenue and profit margins could grow significantly over time. The company has already exceeded analyst forecasts on multiple occasions, which is a promising sign. Analysts currently project over 50% upside, and given the company's trajectory, I find that outlook realistic. As with many small-cap stocks, D-Wave experiences large price swings, often influenced by market sentiment and discussions surrounding quantum computing. Because of this volatility, I always recommend buying on the dips, as price fluctuations have been frequent lately. The last stock on our list is Biomerica Inc., ticker symbol BMRA, a global biomedical technology firm specializing in the development, patenting, manufacturing, and marketing of advanced diagnostic and therapeutic products. The company focuses primarily on gastrointestinal and inflammatory diseases. Recently, Biomerica secured 3 significant international patents for its in-foods technology, aimed at addressing gastroesophageal reflux disease (GERD), Crohn's disease, and ulcerative colitis. In addition, the company has launched its in-foods IBS test directly to consumers, helping individuals identify trigger foods that may exacerbate irritable bowel syndrome (IBS) symptoms. This initiative underscores Biomerica's dedication to providing accessible solutions for gastrointestinal health. Surprisingly, about 20% of the U.S. population suffers from GERD, while 10% are affected by inflammatory bowel disease. With such a large market, Biomerica is positioned as a key player in what could become a multi-billion-dollar industry in advanced diagnostics. Looking at its financials, revenue and profit margins appear cyclical without a clear upward trend. However, the company is heavily invested in R&D, having recently secured new patents and launched its direct-to-consumer test kits. This suggests Biomerica is still in the early stages of its growth trajectory. Because it's so early in its development, analysts' projections are currently limited, making it difficult to predict its future performance. However, given its patent portfolio and the expanding market for gastrointestinal diagnostics, this company might be a hidden gem in the sector. If small-cap stocks and potential hidden gems aren't your preference, don't worry, I have plenty of large-cap stocks you can check out as well. If you find value in videos like this, all I ask is that you hit that like button. Don't forget to subscribe. The best prescription is a subscription. Thanks for watching.